Hey everyone, wanted to drop a little video here. Sorry if you hear my daughter in the background coughing, but she's got a little bit of a bug. We're looking at cross-asset volatilities here in the upper left corner. We can see that everything up to a couple days ago, up to the beginning of yesterday, was really compressing a little bit. Equity volatility compressing, the VIX came off a bit. Oil volatility, FX currency volatility came off a little bit. The only thing that hasn't come off is that rates vol. So rates vol, and we can look that up. If you look up the MOVE index, MOVE, the MOVE has been moving up. So it's been reflecting worry going into the election, worry certainly going into the FOMC. We've seen, as I've been talking about, the economy is much hotter than people expected. And that's resulted in a real backpedaling of rate cut expectations. So now we're back into this world where maybe we worried about employment for about 3 minutes, and then now we're worried about maybe the economy gets a little bit too hot. Short-term rates and certainly the 10-year has pushed into that 420, 430 range. That's a little bit high. If we get above that, as Samantha LaDuc has been saying, we get above 430, that could be a sign that we're starting to worry about inflation, which I've been talking about the last month and a half or so. We could worry about inflation at some point again. For all the people who thought that inflation was vanquished, we could see a little bit of that again because things are just generally okay out there. Guys, just a quick disclaimer here. Everything we talk about today is for educational and information purposes only. This is not investment advice. We are not registered investment advisors. So please do your due diligence. This is all for learning purposes only. So that we want to see that 10-year come back down into the low fours for the porridge to be warm again. We want the porridge to be warm because that's what stocks like. They don't like anything at extremes. They don't want inflation too high. They don't want it too low. They don't want growth too hot. They don't want growth too slow. It wants things to be just kind of okay, meh, as I like to say it, right? So we want things to be just kind of okay enough for stocks to do well, for companies to do well, for companies to be able to pass on a little bit of inflation to consumers. That's a happy world for the stock market in general. I'm speaking broadly here, of course. As we drill down into different sectors and names, of course, things are going to change, but that's generally speaking. So we've seen Trump odds kind of increase here. So the predicted odds are showing Trump ahead. Now, there's a survey for everything, and certainly there are some that don't show as much of a lead. I kind of feel like Trump in the lead is number one. It's somebody leading, right? So I think the market doesn't like 50-50 coin flips. The market wants to know, okay, who's going to come in, because then it can kind of plan for that. It can say, well, okay, this sector is going to be good, this won't, these names are good, names aren't, it's good for tech, bad for tech, etc. If it doesn't know, then it doesn't know. And uncertainty is obviously not a friend of markets. And we know that old saying, markets don't like uncertainty. So one or the other is okay, I think, generally speaking. Harris may be a little bit more negative just in terms of some of her policies. Trump, with the tariffs, maybe we have a little bit more positive outlook for markets. I'm kind of thinking that to some extent. So we're kind of stuck in this area here. If we look bottom left, gamma quite positive where we are. That's why we're sort of seeing big bounces all the time, bounce. Where generally this is a picture that changes over time, but we're basically in a situation from a gamma perspective. Remember, positive gamma means less volatility. Negative gamma means a potential accelerant in a particular direction. So a move down could accelerate, a move up in negative gamma could accelerate as well. So if we get up sort of towards that 6,000, maybe 5,950, we could get a real melt up into the JPM collar range above 6,000. That would be sort of 600-ish on the SPY. In the meantime, we're going to kind of sort of float around in a sea of positive gamma here. Okay, let's move on. So what's been happening in general? So I put this out on Tuesday in my show at LaDuc for members, and I said, listen, things are getting very quiet. And so I said that it could be kind of a week before the fireworks, but the problem is, and I expected that quieter week, and I was right. We've gotten some very quiet periods. Now they've crushed it. What does that mean? They've crushed the volatility. Look at this chart here of the term structure. For S&P, we've got these front volatility levels, these expiries, right? The ones that lead up to the election and FOMC, these have all been pushed down. So they were selling all these to fund that upside potential volatility. And of course, we see around the election a little bit higher. And then beyond that, so we've got a little bit higher volatility. So we've been seeing them push it down, push it down, push it down. And I put this out at 6:30 a.m. yesterday morning before we had that big sell-off. I said, this is the title of my newsletter. So if you're not on my newsletter, look down in the description. I'm going to make it the first thing in my description. Jump on that newsletter. You're also going to get a free ebook that I wrote called Crush the Premium. Used to be called Let's Talk About Volatility, but that's what it does. We're going to talk about interesting volatility concepts. So jump on there if you don't want to miss any of these updates that I send people. I don't send a ton of them, so you're not going to get inundated. But when I have something important, I think, to say, I'm going to send it out. So I said, it's titled, Are Options Getting a Little Bit Too Cheap to Sell? Right? What happens when options get compressed, you have very little theta left in them. So there's not a lot of benefit from that sort of income generating standpoint because there's very little theta left. But what happens? You start getting higher negative gamma. And higher negative gamma means, as I warned LaDuc members, I said, it can work, but it also might not work because it doesn't take much of a move to hurt. Your strikes are closer, right? You sell low cost puts or calls, your strikes are closer, you're not getting much theta, and all it takes is one move from the market, a little bit of a hiccup, and you can get run over quickly. So that theta to gamma ratio starts to get a little bit unpleasant. And it can keep working, right? Because by definition, a low vol market could continue to be low vol, but it doesn't take much for that to go wrong. So we've been doing things like I'm not super keen on IWM at the moment in a higher for longer environment. IWM, that's the Russell 2000, 50% of the constituents in there have floating rate debt. So if we stay higher for longer, that's a challenge to some of those. So I'm still long it. I'm going to hang on for a bit. There's a chance that it could firm up here, but I've lowered my calls to the 225 level. I wanted a little bit more premium in here to make up for a little bit of a challenging environment for IWM. So that's kind of what we're looking at on a broad basis, that cheap options. In fact, I've been telling people that maybe those short-term options are actually a little bit on the cheap side. Now, what we did is when I saw that things were getting too cheap, I said, this is time for us to cover some of these positions. There's not a lot of meat left on the bone. So I covered some Meta short puts. I covered some Apple short puts. The Meta has zoomed. It was down 19 bucks, 18 bucks yesterday. It zoomed right through the strike. So that was a good, timely decision. Now, I took this opportunity to put on some upside. I'm not a huge fan of selling options into earnings events, but I got taken out on my Meta and I want to own it again. So I'm in a position where, let me show you here, where of course my interest in Meta hasn't waned at all. We had that very big call wall as Meta knocked its head against that 600 level, which often you get a big open interest position on the option side of things when you have a big round number like that, right? It'd be 600, it'd be 650, it'd be 500, 550. Those are usually big levels. So we had a big call wall there at the 600 level, and sure enough, we hit it. I don't know if we hit it in the actual market, but certainly pre-market we hit it, and then we've reversed since then, and we're back in the 560s, down from 600. So now we've got some gamma in this kind of 560 to 575 range, where it's probably going to act as a bit of support for now. What else am I seeing here? Well, you can see it in another form. You can see all this positive gamma here. Now, it may not be a massive amount, but it's enough to ensure that there's some supply of demand in here, either from market makers buying against puts, against short calls, whatever it might be. Well, short calls wouldn't be positive gamma, but they're buying against long puts. And then as people sell out their puts, the market makers are buying those puts back and they're hedging, right? So that is creating supply in this area here. So that gives me a little bit of confidence that we could see a little bit of support. If we go through the earnings report and things collapse a little bit, we might see nice support in there. Not to mention Meta has been just a very popular stock, very positive stock. You guys have heard me talk about it before. It's that AI winner, right? I love to look at things as, am I winning now versus winning later? Well, this is winning now. They're putting AI to use. So what did I do? Well, I sold the 525 put at the no 15 level. I got $12.20 for that, and I used that to fund an upside call spread. So it's kind of a risk reversal that gets you into meta around 525. I think I put this on for a small debit, so it's costing me a little bit of money, but you can see that between 525 and 567 or 572 and a half, really nothing doing here, right? So if on the earnings it drops down into these higher gamma levels, certainly 500 is going to be a big gamma level. I'm going to be okay. I'm going to feel okay. And frankly, I want to own Meta again. I got taken out through some cover calls, and I've been flipping some options back and forth for some nice wins. But at this point, I'd like to get back into this name. Now, another reason I like this, I bought this 572 have 610 call spread, which I'm funding with this 525 put sale. So you have to be comfortable owning Meta under basically 525, which in this case, maybe 526-ish. But the implied move at this point is about 50 bucks. So from 563 where we are now, we could bounce up $50 into that sort of 610 area. That's going to put this call spread right fully in the money and in a position where that upper strike is going to collapse, right? What happens on earnings? After earnings come out, we see volatilities usually collapse unless the move is catastrophically, up or down. We're going to see that 610 just start to burn off. So I'm going to see, I think Meta could just kind of like gap and sit there, or maybe gap and go a little bit, just kind of drift up after that, maybe sit around that 600 important psychological level. But between 600 and 610, I think there's going to be some support there. And I think that 610 short call in that call spread is just going to burn off. I'm going to wait for that to burn off and then look at another upside structure at that point. So this is positioned perfectly for that potential gap up. Now things could change over the next 3 or 4 days as we wait for those earnings. So this $50 gap up might start from somewhere else. But at the moment here, I'm very comfortable with this particular position. So let's take a look at Microsoft. So I wanted to give you another idea of what you can do going into earnings. So number one is the put spread caller. So if you're sort of comfortable with Microsoft kind of up around that 450 level, 450, 455 level, if you don't think it's going to go a whole lot higher than that, what you can do is sell that call to buy that downside put spread. Now, when you're doing the caller, it's the opposite of the risk reversal. You tend to be getting that negative volatility edge. So you're selling something a little bit less expensive to buy something more expensive. Whereas the risk reversal, one of the reasons it's my favorite is you're gaining in volatility edge, which we want to do as traders. We want to do as options traders. We want to benefit from selling something expensive to buy something cheap. It's not always the case for every particular instrument. It's certainly not the case on silver. It's the opposite, or on gold. But typically, guys, just a quick disclaimer here, everything we talk about today is for educational and information purposes only. This is not investment advice. We are not registered investment advisors. So please do your due diligence. This is all for learning purposes only. A little bit, but it's a little less meaningful because they're cheap anyway. So every nickel makes a huge IV difference. Who cares? So you can put on this put spread caller basically for a very small debit and protect your Microsoft position below 410. So Microsoft's trading around, what is it now, 424. You could put this on. You've got a little deductible from 425 down to 410. But beyond that, you're protected down to about 380, right? And then down in the mid 300s, Microsoft just gets pretty cheap again. So nice way to protect your stock there. And then, of course, if you want to play the upside in something like Microsoft, let's take a look at that as well. Here's your other choice. Play that upside. You could put on something like a 435, 55, 75 butterfly. So this is something that is going to be not long a ton of deltas, right? So this is, it's not super high conviction, but we know that we're going into an earnings event and volatility is very high. So just buying a call, if you just buy one of these calls, you're going to, the IV is going to get crushed, and you're not going to really make any money, or very, very little, or even lose money depending on the size of the move. So you want to take advantage of something that's going to be short a little bit of Vega, which this strategy is going to be, right? So somewhere between this negative 32, negative 121, if we get up into this kind of expected move up in this 450 to 460 range, we're going to be in a beautiful negative vega position. So when they crush volatility, you're not going to be worried about it. In fact, you're going to be rooting for it. You want this thing to go up and sit and maybe even gap and go small. You don't want it to get too far beyond that 470 level, because at that point you're going to lose the benefit of this particular structure. But if you're betting on something, like an upside move in Microsoft with a crush of volatility, that's kind of a nice way to go. So hopefully you guys have enjoyed this. A couple of different ideas. We did some Tesla yesterday. That was pretty cool. We've got, what else have we got here? Our coin position looking really good. We put this on, this incredible coin position for even money, sold a third of the position at 8.45. So we got in at 20 cents, got out of a third for 8.45. Then we took off another third for 14.80. So at coin two, when it got up to 2.15, I knocked out another third of the position. So now, because it's a long-term position, I'm going to hold on to that third, and I might even add back one of these thirds that I sold, because we saw it go from 220 down to 195. It's bounced a little bit today with the whole Bitcoin complex doing a little better. Bitcoin's up a little. So we've had a little bounce in that area. Mara's doing okay. CLSK is doing okay. We got out of our CLSK for a massive win. So we've got a couple of plays. We've got the coin. We've got the Mara. So I like that area. I think it could eventually go. Who knows when? It keeps struggling through that 70,000 level on the Bitcoin side of things, but it could get through at some point. And this is kind of a nice low cost structure to take advantage of that. We're already monetizing it for big dollars, and we may even add back some risk at some point, depending on what the skew looks like, depending on what the chart looks like. And remember, we bring in all these things. We bring in the idea, the narrative. We bring in the volatility levels. We bring in the chart levels. We bring in skew. We bring in all these things, and we layer our approach to our thesis to make sure that it's a good, healthy one. We don't have to have everything 100% going for it, but we need to have a number of those things going in our favor. So hopefully you guys enjoyed that, and we'll see you in the next video.